Kirsten Bay from Cysurance. We are going to be starting the first in a number of conversations, the first of which is called Defense in Deeper Depth. Um, to get us kicked off, Kirsten, do you want to just give a brief introduction for folks that don't know you?
Yes, I'm Kirsten Bay, co-founder and CEO of Cysurance, cyber insurance platform bundling with cyber solutions.
Excellent. And of course, for anybody that doesn't know me, I'm Steven Legg, CEO and co-founder of Antigen Security. We are a channel first DFIR and managed security provider that also partners with cyber insurance carriers like Cysurance and others to bring intelligence-driven solutions to the market. So really excited to have this conversation with you today. Wanted to start with some kind of broad strokes about the industry and talk a bit about why we're having this conversation in the first place. So to get us started, Kirsten, I guess what are your thoughts broadly on the overall trajectory of the cyber insurance industry in general, and where do you see it going?
Well, for anyone who's been reading much in the news these days about cyber insurance, it's been much more of a frequent topic than is typical for these types of things that you would read about. Insurance isn't usually the most exciting topic that people are interested in hearing about, but cyber insurance certainly is, because of all of the ransom attacks and other attacks that we've been experiencing that have been dramatically increasing over these last years. And so what we've experienced, of course, is with lots of losses, you have different and lots of changes as it relates to premiums and whether you're insurable. And so what we've really seen in this last year is like almost 30% of small and medium-sized organizations have been non-renewed, right, for cyber insurance. So that's one area. And then the cut in the amount of coverage you can get. So now the market's really squeezing down how much you can qualify for. And then lastly, of course, the premium increases. And a lot of smaller organizations that we work with have been alarmed by the significant increases. And I talked to one organization, it was a fairly medium-sized hospital. Their increase was 360% per $1 million of coverage they had. So there's a lot of sticker shock going on. But part of it is because the insurance industry is really unsure of how to protect against these cyber threats because they're evolving forward, as opposed to other things like insurance where you can look backward and understand where do we go from here. And so it's sort of the three-legged stool in the insurance side, and then we couple it with kind of the uncertainty of where the next risks will come from in cyber, and you have what we refer to as a very hard market, both literally and metaphorically.
Yeah, indeed, and I think the bottom line, or the punchline there, is that organizations like you're describing are experiencing this all the time. I can't tell you how many partners and customers that we've seen that have traditional cyber insurance relationships through their broker are either losing coverage midterm because of failure to comply with either a specific vulnerability call that the carrier makes, or some other request that they're unable to fulfill on midterm, as well as all of the risk-based circumstances you're talking about with premiums going up, and really, like, looking back at 2021 and coming into 2022, there's been such a unprecedented large amount of things like ransomware, all different forms of fraud, business email compromise, and those numbers are really only continuing to go up, despite a lot of really meaningful efforts from many different directions in the industry to tamp down on that. And I think that presents a really interesting and difficult problem for carriers to solve in particular.
Well, it absolutely does. And as we look at like the ransomware piece right now, if it were only so simple as making a decision, we will pay it, we won't pay it, we'll negotiate it, we have backups, it doesn't matter, which is what originally the predominant number of people were told. Like, if we can just recover from a backup, everything's okay. Now we're dealing with the exfiltration issue. Was it exfiltrated? If it was, what was exfiltrated? They have the keys, you don't, which means now the breach notification costs are becoming exorbitant. And so that's one of the areas where people, I think, haven't made the connection, where the losses aren't necessarily even being driven necessarily by the ransomware itself, that loss of having to pay whatever X dollars there are, but the fact that now it's this exfiltration concern. And now with the new rules with all of the states. You have California and Nevada, Massachusetts, et al., right? They're all adding these new requirements that now the costs are really like almost 100 times what the original loss could be. And so, and those have what we refer to as a very long tail, meaning that not only do you have to pay for notification, credit monitoring, but you may also have to prepare for lawsuits, which means you have to hold a potential reserve on the balance sheet on the insurance side. So the breach piece, and the exfiltration concern is now becoming much more important and significant in terms of the long-term risks that we all face, much beyond just the initial concern of getting that terrible screen, you've been locked, right? And that's where it begins.
Yes, indeed. And I mean, I think anybody that you would talk to that has gone through that would pay any amount of money to not have gone through it. And often you don't hear from victim organizations either for disclosure reasons, which are obvious for companies that continue to operate, but there are many companies that stop operating. They go out of business as a result of these circumstances, just because it landed at the wrong time, or hit them in a particular way that caused them to lose a lot of, whether it's customers, transactional business opportunities that were keyed up that they couldn't execute, what have you. What are your thoughts on that? And can you tell any stories about noteworthy folks that have gone through that?
Yes, well, the first thing is, and certainly we've talked about this before, that one of the challenges, particularly for smaller organizations, is the thought, well, I don't really have anything anybody wants, so do I really need to make that investment? And I think that that's one of sort of the uphill battles, both for insurance and security investments alike, is that is the juice worth the squeeze in that particular scenario? And so what we are seeing is that there are more published incidents of organizations who are going out of business. And I was just reading today about a marketing firm in Arkansas that went out of business, and there was a subsequent lawsuit against the carrier for not covering. They actually did have cyber insurance, but it took them over 2 months to try and recover. And so from the period of October through December of 2000, their IT teams just could not recover. And they had a particular strain of ransomware where the organization refused to negotiate. So that's became like a new thing, was that, it's all or nothing. And it got to the point where they just could not continue to operate and ceased to exist, and then filed a subsequent lawsuit. And there was also an imaging company around the same time that went out of business, and also a large medical firm in California, because they refused to negotiate. The ransoming organization deleted all the patient files. So they just could not operate at all. So the risk is deep, and so the question then becomes, well, what is the right thing? Because there's a concern, with this particular situation. Well, I had insurance, and then I got a declination, and now we had to sue the insurance company, and what now, right? So if I have it, will they even pay? And to the point you just mentioned, that's where this due care issue really, really comes up, because one might think that they're compliant with their insuring agreement, and it turns out they're not. And so that's one of the really key areas, is understanding very clearly what the expectation of the security environment and posture must be, because you must do something, right? And that's a key area of what we have to focus on in terms of helping organizations be ready. And then there's that last risk transfer piece that insurance can take over.
Yeah, 100%. Well, and I think that's the key takeaway that I would highlight, and that I do highlight to a lot of folks that I have conversations around this with, that it's no longer a situation where you can just take the coolest stuff with the slickest marketing story that's not really proven. You don't really understand what kind of an impact it's going to have on your cyber risk at the end of the day. Slap it in place, have a cyber insurance policy, and hope for the best. Because as you just described, that can sometimes be a recipe for disaster, depending on the circumstances. If you pick the wrong tool, if you miss something, if you don't comply with all of the requirements of the policy to the T. Because a lot of times, in the underwriting process, the brokers are not technical people, right? And even some of the underwriters are not deeply technical people. So they're making this decision largely on a business narrative that they're not super informed around. And so the I think the precarious position that puts a policyholder in is that they may have attested to something that they don't realize is actually now a landmine for them down the road. And that's what creates the situations like you just described with that company that unfortunately went out of business, that marketing firm. So, I think it is concerning. And I think that's why we're seeing overwhelming and kind of mounting pressure on the carrier side to enforce better, more specific prescriptive requirements around what solutions and types of things need to be in place, how those things are vetted, and just to call you out, Cysurance has a really interesting solution to a lot of that in your blockchain and the technology that you use underneath that. But I think that's only the first of those kind of advances that we'll see, and I think the entire industry will likely go in that direction over time.
Well, I agree. And I think being able to break apart the insuring agreement, and what a lot of people don't understand is that's actually what your policy is called. It's a contract, right? And so it is an agreement, and those are the contractual obligations you have with the carrier, that you will do the things that they require of you, even if there's a little bit of a gray area.
Mm-hmm.
And so one of the things I have a question about, having just come up with the new Microsoft Exchange vulnerabilities. And so
Mm-hmm.
I've been getting notices from different organizations saying, hey, how does this affect my insurability? What do I do? Do I know if I'm even at risk? And so for a lot of people, they don't understand the difference even between Exchange and Office 365. So they don't even know if they're subject to this particular vulnerability.
Mm-hmm.
But also, these are the forward-looking concerns. And as we have talked a lot about, not only should we be able to understand today what your environment is related to, whether you're compliant with that insuring agreement, but how do we measure evolving risk? Because today you could be perfectly fine, and tomorrow you're not, because of this Exchange issue, as an example. It's
Mm-hmm.
no fault of the organization or the due care that they intended to provide in their network environment. So what do you think about that side of it, and whether and how we manage the evolving pieces of this risk?
Well, so I think one, obviously having the right third parties to help guide you in remediating those things is a important part on the fulfillment side. But on the compliance side with the carrier, the challenging circumstances that vulnerabilities are, by their very nature, are always going to be discovered in different technologies, right? There could be a vulnerability tomorrow that puts millions of organizations at risk, and carriers traditional response is often to do something similar to or to have a conversation similar to what you just described, which is, if you have technology X, have you verified with the step Y, how you're addressing it, and can you attest to us that you have addressed this within this time frame? And I think the challenge right now is that approach is putting a lot of organizations in a situation where they can't necessarily, patch it in 2 weeks and get it online, because, applications like Exchange, at their very core, having both database, web features, and lots of technical ins and outs, require a lot of care and feeding. To your point about due care, it creates a very untenable situation for everyone. And I think the reaction on the carrier side has largely been driven by just the mounting risk and inability to identify the signal in all of the patterns that they're seeing as to what is actually going to be the right lever to pull to bring that down and make their policies not only profitable but responsible for them and for the policyholder. Because as the last few years have shown us, that's really been a challenge for them to maintain.
Yes, because you have certain organizations, they're like, oh, we have hacker chatter, we see what's happening, you're at risk now. And as we know, like the indicators of compromise versus incident,
Mm-hmm.
those three elements that really drive whether these are real risks. And as you say, the truth is, like, everything has a vulnerability, and
Mm-hmm.
whether that can be exploited for escalation of privileges, whether that can be exploited such that you can actually exfiltrate data. And so those are the pieces that I try to think about when we're looking at not whether we should take things seriously, because of course high vulnerability threats should be taken seriously, but there's also this line of demarcation between what results in an insurable event occurring and
Mm-hmm.
what creates an event that may not necessarily result in monetary damage, but is still harmful to the organization. And how does an organization prioritize those things? Because one might say, well, if we aren't insurable right now, we must make that the first priority over other things, even though that might affect availability, as an example.
Yeah, no, I agree. And I think the conversation is a little bit different on the carrier side versus the security side and the application of those things on for policyholders. But the end result is the same, and it's good for both of those parties if it's managed well. And that's why I think when you look at cyber risk in general as an organization, you really can't look at it from just one perspective. You've got to look at it from, how am I financially offsetting this? How am I putting the right controls in place? Do I have the right parties operating and managing those controls for me? Is our security actually what we would consider viable and effective? And how do we measure that? And I think a lot of the things, again, kind of to the recurring thread here in our conversation, a lot of the things that make that challenging on the practitioner side of it is, while there are standards, and like a few come to mind, like the CIS benchmarks on the defender side, the MITRE ATT&CK framework on the attacker side, in terms of understanding and abstracting those concepts in a way that's communicable to more than just insider technical practitioners. The challenge becomes, what is objectively effective, and how is it going to affect, from a carrier side, how is it going to affect our underwriting decision? How do we gauge that risk, and what does that look like in terms of, both the time to detect, the time to respond to, whatever it is that's going on, as well as things like, mean time to contain, which all those three metrics in general indicate how financially damaging an incident might be to an organization. And I think a lot of organizations have not thought about that to a great extent, and aren't really, they don't think about it in terms of cyber risk at the board level. They think of it, as oh, well, we have this IT director, or we have this security director, and they've got it under control, but we don't really understand what's happening under the hood there, and we don't need to. And that's just not true at this point in the game. Like, you as a executive driver of any organization need to have at least a say and awareness of your cyber risk posture, because whether you're talking about insurance, financial warranties, or other protections that layer into that, appropriate security measures, and what that looks like, and making sure that those security measures are carrier approved. Those pieces become critical to that kind of ongoing conversation, both from a financial and budgetary perspective, as well as just a broader risk management conversation in terms of how you operate the business.
Absolutely. And I also think that as it relates to like the CISO role, there are many now more than ever statements that we have in security, but I think for the CISO organization, I think this is a now more than ever, the CISO has the opportunity to have a much different conversation than they ever have had in terms of the business outcomes related to these investments. And so while there are a lot of people that feels that a lot of those who feel that this is a dire situation with cyber, which we've been talking, gosh, for like almost 20 years, we've been sort of chicken littling it for a long time. And it's sort of come to roost, in no pun intended, and in a lot of ways where it really is very serious. And now it's really, we're starting to see how serious it is. And it's unfortunate, but this is human nature, that we have to kind of get to this point of a little bit of a crisis mode. And for a long time, I've said that where I believe we will be able to get to different outcomes when there's true financial pressure and economic consequences to these decisions. And so the positive with insurance conversation pushing as it is on this particular topic, it gives cover for the security professional to have a very different conversation. And where I almost feel like it's little c becomes a big C in that CISO role, because they really can have a significant and influential role not only in the budgetary aspect of it, but also showing the value of those investments in a way that was difficult to measure before. That gives a different voice at the board level as well.
Yeah, no, I completely agree with that, and that's a really interesting outcome of all of this. Is that I like the little C big C analogy that made me smile. The reality is that it's transforming the conversation from something that was previously about compliance and budget and kind of minimum viable security and risk management into something where they're truly asking the question in simple terms: how can we operate this business in a secure way that we solve for these contingencies and put us in a position to be legally defensible if and when something does happen, and give us the tools we need to tamp it down, minimize the costs, and move forward as an organization regardless of what the particulars of that incident might have been. That's the reality now. It was not that even 3 or 5 years ago, and certainly not 10 or more. But I think, to your point, it's taken this crisis in the cyber insurance industry that we've seen the last, especially 2 3 years, I think, to bring that to a head, and it puts a, I don't know, what we see on in the security side of this conversation is that there is a much bigger impetus on efficacy and on true, I'm struggling to find the word, on true outcome oriented thinking in terms of risk management, to the point that you just made, and that change in thinking is the thing that transforms the conversation on the security practitioner side and turns it from something about, again, tools and budgets and whatever, into a business conversation about risk. And that's a conversation not only we can win, but we can actually have a positive net impact on the organization as a result of that.
Yes, absolutely. And I see that the dynamic in those roles is changing. I spoke at Black Hat this year, and I was speaking with a number of organizations who are in the healthcare side, particularly. And for these organizations that are north of $1 billion in annual revenue, they now have 30 underwriters in their review process for their renewals. So it's just, I mean, it's mind blowing to think, and they're fighting for every single dollar. So when you now sit in a role where whether or not you get that renewal is based on the work that your security team has done over the course of a year, and the investments and the management of that infrastructure, that changes the nature of that role dramatically inside an organization. And so there's a lot riding on it, but it also, gives a very different voice to that conversation. And so these are the drivers, I think, that really enable the practitioners to weigh in a different way to say, look, and also on coverages, like what we've heard instances of, chief risk officers making a decision, oh, we don't really need that social engineering coverage. That's, forget it. That's too expensive for us. And then the incident that ends up costing them all this money and having no coverage was, the phished person who sent the 50,000 or the $1 million, the 10 million, whatever, fill in the blank, bad number. And the security practitioner didn't get to weigh in and say, look, there's no real compensating control for a person who just chooses to send a wire, right? We can't, that's a risk transfer component, but they weren't solicited in this particular instance. And so therefore that was a $3 million loss. So it's really, it does change the nature of that conversation.
Yeah, no, completely agree. I think the social element is a critical factor that I think will always be a problem that has to be solved for, and that's probably one of the few things that you while you can put all the right compensating controls, processes, and other things in place, you still at the end of the day can't stop a person from being a person and being tricked, and so that, I think, that will always remain a challenge. But to the point that you made about coverage, I think a lot of companies, when they're deciding their coverage, don't think of it in terms of total risk management, and do think of it in terms of that kind of nickel and dime, how can we cut costs? How can we fit this budget? And that's why I think the rise of performance-based compliance on the cyber insurance side, and the rise of again, more kind of prescriptive and specific requirements on the fulfillment side for the security organization within these policyholder environments is the real long-term solution to a lot of that. And I think that's why we're starting to see carriers move in that direction. We've seen in our network of both IT and managed service providers and customers, we've seen customers get denied claims just because of the platforms or solutions that they chose were not, up to snuff in the eyes of the carrier. But how do you even know that? How do you as a policyholder that doesn't have any connection to those carrier organizations, and certainly even your brokers may not know, how do you navigate those waters? Is it?
Yes, and the other part of it is where you get these sort of perverse positive outcomes is that I think we finally have gotten to the point where zero doesn't have to be the answer for cyber events, because we lived in a world of proving the negative for so long in that respect, where nothing's happened. Is that because we're super great at what we do? Is it because we just don't know about that terrible thing lurking in our network that just hasn't shown us that it's there yet? Or am I just so great that I've managed to do the best network controls in the history of network controls, right? And so now I think we've gotten both insurance companies and executive teams comfortable with this concept that it doesn't have to be zero, that mean time to know and investing in the different products and infrastructure that allow you rapid knowledge of an intrusion, rapid remediation of that intrusion. That's what cuts costs, cuts downtime, and really mitigates that impact. And so, my view is always, how do we take these concepts and reduce severity, impact, and frequency of events, and to get people comfortable that zero doesn't have to be a cyber event. And what I've always found strange in our world is there aren't zero car crashes or zero house fires. Why would you expect us to have zero security incidents, right? Or zero losses? And so for me, I call it, in my car crash analogy, the challenge right now is that 80% of our losses are catastrophic totals, right? And what we really need to get are more fender benders. And that's where we need to right size and help people understand that the better we can monitor, and it's protect, detect, respond. It's like, really, it's in a nutshell, it's that simple. But those are the elements that allow us to rapidly understand an intrusion and remediate and move on to the next thing. And so if we can have a variety of smaller losses, that's an acceptable outcome. But we have to prove to the market in general that that's actually possible. And when we had SolarWinds, and even from the prior exchange event that we had, there were a number of significant claims that resulted from that.
Mm-hmm.
So, it's like when we feel like we've just gotten our arms around it, or the carrier market feels like we might have just gotten a little bit better, and some of the numbers are proving that out in terms of claims. Now we're seeing it drop down a little bit, but we're still seeing the number of claims in total growing still dramatically. But fortunately, because of these forcing of controls, we are starting to see that the cost of those, so the severity of events, is starting to drop down just a little bit, which is a good indicator, because we're starting to see that by instituting a better framework by which people have to function, that does have direct impact and outcome that's positive.
Yeah, no, completely agreed. Well, and that's why I think the fomenting of all of that kind of transient knowledge and actuarial data into some of the standards that are rising in the carrier world for the security side of things really are only kind of paralleling that same story. You're seeing a departure from kind of the old traditional products of, get everything in one place, like the old SIM monitoring model. Get all the data in one place, really, really noisy, really low fidelity, but it's all there. Now we're kind of going closer to the source with the desired end result of catching those detections a lot earlier in the kill chain, so that you can contain and remediate that before an incident becomes a breach, as an example. And in those cases, you can transform those circumstances from something that, to your point about financial costs you little or nothing out of pocket, or maybe won't even result in a claim. Or if it does result in a claim, it's going to be far less than if that attacker had been able to gain persistence, move laterally, and expand the scope of their breach across the network and do a lot more damage in general.
Yes, and it's interesting when we think back, a couple of factors. One is what really started this ball rolling in terms of changing the dynamic of cyber insurance was the NotPetya attack.
Mm.
And what was interesting about that was one of the fight around nation state, which is a whole different topic for another day that can take hours and hours and never get really anywhere in terms of solving that question. But the larger one being just the dramatic impact it had across organizations and how it really caused a complete standstill. And one of them was the European division of FedEx. And they were down for a long time, like down to pencil and paper. And they didn't have cyber insurance at the time. And their answer was, well, gosh, it was really expensive. So imagine in 2017 when an organization's having that conversation. Now, that's a very different conversation, and I think they're insured now. But their view was, we're not a technology company, which I found shocking, right? Because there's this view for many organizations that I, by definition, am not a technology company, but technology is an enabler for everything that you do as an organization. I have to sign the little thingy that gets me my package. And that's not considered being a technology company. And so what I think a lot of organizations need to understand is that, especially post-COVID, digital transformation all the way down to micro businesses has completely accelerated. And in fact, organizations that are below 1,000 employees now are accelerating digital transformation faster than the Fortune 1000. Mm-hmm. And how do we help them be prepared? Because they don't have the same level of security staff and support to be able to manage through that. And that also, organizations of that size, they're about 51% of the US GDP right now. So that's half of our GDP is generated by organizations who are moving faster to an online presence to conduct business because they learned that they had to. They have no choice. And so how do we support those types of organizations who need to accelerate the adoption, but will definitely create gaps because of the speed at which they are adopting these technologies?
Yeah, no, that's an interesting question. And I think carriers have already started to foment this as in those standards. And I think whether you're talking about next gen antivirus, endpoint detection and response, managed detection and response, segmentation technologies and zero trust, multi-factor authentication, it's transforming, just like on the, to your point, the digital transformation side on the operations, delivery and fulfillment and logistics side of businesses. But the security side is kind of following suit. Everybody needs X, right? You all need kind of the same standard controls that measurably and demonstratably put you in a position to tamp down and detect threats earlier and be able to respond to them. And that is kind of the same impetus that is driving that side of the discussion that we're seeing in the business side with like e-commerce platforms and all the different digital transformation journeys that small and micro businesses go through as well.
Yes, and so as we look at concretely the things that organizations need to have to be insurable, right? I mean, we have spoken in really broad brushstrokes in terms of what's impacting the industry, what's driving the industry, what can make so I always like to sort of think, as we are heading into the final portion of our discussion, I don't want to end with be afraid, be very afraid, because that doesn't really help anybody. But I'm an anti-FUD person. So for me, it's like, okay, so what do you really need to be insurable? And so we have these lists of things, and MFA is at the top of this list. Like, it literally is, you cannot pass go or collect your $200 if you do not have MFA in place. Yeah. And yet, so when I have these webinars, I'm like, okay, everyone get MFA. And that's actually, like, I get more questions around them, like, on what? On like everything, on mailboxes, on, and so I think from your thoughts, I mean, for us, when we look at that, it's like at minimum, you have to have it on your mail. But from your perspective, when the MFA comes up, and when you also look at security incidents and the remediation side of the business, What is your view practically to check the box, but also to really protect your organization so that we don't have to do the DFIR?
I think the short answer is put it everywhere that it can fit. MFA is one of those controls. Like the stat that it gets thrown around all the time is 81% of breaches involve an identity related vector, and MFA would have either prevented or slowed it down. That's a really powerful number to your point about why you should not pass go without MFA. But in general, it's going to be especially mail, anything where data access is brokered, right? It's going to be any privileged access. So anyone that has administrative rights to any of, whether it's a website, mail system, or any critical business systems to the organization, the MFA should be applied in those places explicitly. Really, it should be on everything, like I said. But if you only can cover those two things, those would be two great things to cover with it.
So if you're an organization that just, like, let's say that they're an O365 organization, so everything runs really on that portion of the platform. Is that one control at the top line, where you're at the Active Directory? Is that sufficient if you're in that type of, your small business with that type of instance? Or are there still other areas where you think there are gaps?
So MFA obviously is important and covers a lot of the identity related threats in an mostly or completely Office 365 oriented business. But every business has endpoints. And if you think about, as a DFIR firm, we think about all the time, where the context of a breach happens. It certainly happens in cloud systems, but it's usually cloud systems are then accessed via endpoints, right? Somebody clicks a phishing link, they get a piece of malware on their machine that enables access to a threat actor. That threat actor collects all their hashes and credentials from their machine and then goes ham on everything that they had access to. So the flip side of that, I would say, is that having EDR, endpoint detection and response tools in place, not just traditional antivirus, is one of the biggest, what we would consider defensive advantages that anyone can give themselves. And ideally, if your organization can tolerate it, also have an MDR solution on top of that. And those two things are very different. MDR stands for Managed Detection and Response. EDR stands for Endpoint Detection and Response. Managed Detection and Response, really, you should think of not so much as like a SIM or kind of an aggregator for all of the EDR stuff, but what you want to use it for and you want to gravitate towards are MDR solutions that give you the detection engineering and threat intelligence that a security team would give you if you were an organization that had one, because those are the things that make the difference in terms of actually detecting attack activity early and not just throwing an EDR tool that's headless on there and expecting it to protect you from everything. That's kind of a major distinction that I would throw out there. Even for small businesses, they should have that.
Yeah, definitely. And then, the other thing that we have seen a lot of in terms of the changes in policies recently is the requirement for patch cycles. And if you haven't patched within 45 days, you start to have a degradation of coverage. So up to 60 days, just for example, that drops you to 25%. So you've lost 25%. So you have 75% coverage. When you get to sort of that halfway point, the policies are actually flipping around where you have a co-insurance feature, which means you owe half of the amount of your policy up front before your coverage starts kicking in. So, as it relates to the patching piece, and again, this is related to the endpoints as well. Everyone should be running, their updates on their computers and, restarting them frequently, because those are just the simple things that can really solve a lot of problems and not accidentally trip up an insurability clause. Like, everyone else updated, but there's the one person, and that's how that vector was leveraged, was through that one endpoint that didn't have the update, as well as servers and other parts of the infrastructure.
Yeah, no, completely agree on that front. I think patching and patch management and by extension, vulnerability management are another key kind of avenue that a lot of companies, especially very small companies, don't have a good grasp on. And the other thing that I would urge them to evaluate as a part of their patch strategy, and a conversation we frequently have with companies that are in that size bracket that have like e-commerce platforms or other, web-facing technologies at play or systems at play, make sure those web frameworks and other tools are, one, not susceptible to major vulnerabilities that are often found in them, like log4j, but in addition, make sure those updates are proceeding as well, because like whether you use WordPress or Webflow or whatever kind of web backend you're using for your website, for your e-commerce, or whatever technologies may be at play depending on this type of organization you are, those components can often be exploited with vulnerabilities that are very damaging. And because those applications typically, in many cases for small businesses, are also attached to customer data repositories or other things that have data that would be damaging to them from a claim perspective and cause the cost of a claim to go up, that's going to put them in a position where, if they don't manage that effectively, to your point about degradation of coverage, that is something that they really need to meaningfully solve for. And a lot of that can come down to just having like in WordPress, the case of WordPress, there are add-ons and plugins that monitor for updates and give you guidance on when to apply them and how to apply them, and they auto apply them across all of the other modules that you have. There's lots of things out there in the industry that help solve this problem, but you wouldn't necessarily know to look for them unless you kind of really think about your whole comprehensive patch management strategy in terms of all the moving parts that you've got, even if you're very small.
Yes, and there are more moving parts than people realize. And certainly, I know a lot of people use WordPress, and WordPress also is constantly breaking people when they decide they're going to go through these massive updates. And then now everyone's APIs start dropping off. And then everyone's like, security is the business prevention unit, because now it broke my whole system again and now I can't book orders. And so it's always that fine balance of trying to make sure that we're staying secure without creating those issues, which is why those particular solutions, especially like in a WordPress site, are so important, because it does help manage through those major changes as they start to push more security features as well.
Yes. Well, and a lot of those substantive updates that break things often are pushed because of security reasons, right? So, it's only going to happen more, not less. So having talked about it, thought about it, and just have a solution in place for that ahead of when those break events occur is really the key to steering through them quickly and efficiently, and not putting yourself in a position where your coverage could be challenged by it.
Yeah. Well, and I know that part of it, and I feel like with a lot of these cyber things that come out and warn people, like this, like Log4j when it first happened, or this Exchange situation, and all the variety of things that might come up daily and are like on the front page of something that you read. I think a lot of organizations get a little bit overloaded because they don't know, like, is this a concern for me? I don't even know. I don't understand any of this. I think it starts to become, I call it this like infinite deep dark well of fear, because and then people don't act. And I feel like that's the biggest challenge we face with a lot of these situations is they get so overwhelmed by the data that they don't know how to prioritize, especially smaller organizations, such they don't do anything. And so if you read about something that may or may not impact your environment, let's use the Log4j example, and you feel like you might be just a sitting duck in that sense, like if we're waiting for a patch to come, like what do I do in the meantime if I'm waiting for a patch and I'm afraid for my coverage? Are there like gap solutions or things that people can do to help protect themselves while patches and hot fixes are coming in those situations?
Well, in general, looping back to the title of our session today, this is why a defense in depth approach is appropriate for security programs in general, because you're not going to be able to solve for those circumstances where there is no patch for a vulnerability that's been discovered. That's going to happen. It's only happened more and more the last 3 to 5 years, and that will only accelerate because there's this kind of digital arms race of sorts happening between criminal attackers and professional defenders. And so the real answer underlying it is, and this is why carriers also are reflecting this in moving towards stack-based solutions that are CIS aligned or aligned with control frameworks that espouse that approach. You have to have more than one control to protect your organization from a bad end. It's not just MFA. It's MFA. It's endpoint detection and response. It's encryption of email or digital communication that's going to be sent out. You kind of need to look at it, look at your the function of your business first, and how and where your data is exposed and where it could be, and then layer those controls around those circumstances or use cases so that you can achieve a situation where even if you can't prevent every single exploit or attack from materializing on some desktop in your environment where someone clicked a bad link, you can detect it. You can detect the underlying activity that's happening around it, and then you can respond to that before it would matter whether or not you're vulnerable to Log4j, as an example. Even if they exploited it in that circumstance, you could be in a situation where you can not only detect but contain that threat before it's a problem, and stop the ransom event or exfiltration event from occurring in the first place.
Yeah, that's exactly right. And those are the things that I think help people feel like there's some way to manage these risks. That the way it's framed up, I think a lot of times it's just it's undefensible, period, right? And I think that people need to feel like that's not actually the case. And then the follow-on question that I get very frequently is, okay, great, so I've done all of these wonderful things, now do I get a discount to my insurance? And so the thing in this environment, number one, is certainly getting qualified and making sure that we can help people either qualify for their renewals or qualify for their initial binding. Now, as time goes on, we find that with those right controls and being able to show that there's defense in depth, that we can work with organizations that enable us to provide discounting or even alternative risk capabilities.
Mm-hmm.
But the first step really is to make sure that that framework is in place just to qualify. And I think we will be a bit away from sort of the models. We're inundated with these commercials. If you just bundle, everything's gonna be super good and you're gonna be able to get these amazing deals. And cyber insurance isn't the same as bundling home and auto. And so I think just helping people understand the nature of the complexity of what we do in this world, and that there are opportunities for that. But first, we have to help get normalization writ large as a industry, both insurance and technology wise, to be able to really understand that if you implement 5 things instead of 3 things, you get a 10% discount. And we as an industry haven't quite sorted through the corollary between 5, 3, 10, 100, in terms of the controls or products in place that really drive down the potential exposure that an organization has. And so it's not that that's not possible, but right now it's not even in terms of the capability for that pricing.
Well, I would say in the insurance industry, especially because different carriers are at a different place of understanding of that data and what's meaningful in the 3 versus 5, which 3, which 5,
Right.
to what extent, to your question earlier about MFA, to what extent should they be applied, right? All of those things bear an appropriate amount of scrutiny and questioning, but at the end of the day, the I think the solution for that on the carrier side is really to work with organizations that can act as essentially like a cyber risk portfolio manager, and help them understand and enrich their data with the data from all of those customers, and kind of move down the road in that way, informing their actuarial decisions not only on the bad things that happen, the claims, but also on the things that are prevented. And I think that's something really unique to Cysurance that you guys have solved in a very interesting way. And one of the reasons that we're very excited to be partnered with you, because that conversation fundamentally is the future of cyber insurance from where we sit as a practitioner in this space. We see that as the great equalizer, because in that world, it is knowable. You can understand how a single vulnerability or layering of technologies can affect the responsibility financially and from a fulfillment perspective of the policyholder in any of these circumstances. And it wasn't 5 years ago or 10 years ago. And that's a really important and amazing advancement. And I have to credit you and the team at Cysurance with kind of leading the way on that front.
Well, thank you very much. I mean, and you're right, that's the thing that we're really focused on, but it's also why we want to partner with organizations like Antigen for the same reason, because we feel like being at that level where we can look at that data and understand an indicator versus an indicator of compromise versus an incident breach, and how many incidents actually turn into indicators of compromise, like those in the indicators in that whole chain, and understanding if we can catch it in the kill chain at a certain point and actually prove it and prove statistically that enables us. And to your point, and these three things or these five things, 60%, 70%, 80% of the time, enable us to get that viewpoint. That's really what we need writ large to completely start to shift the industry. And so that partnership for us is exciting, because we think that we can really start to get through that information to make sense of it. Because I have people say to me, look, we have all this claims data. And it's like, well, that's great, but in relationship to what? If you see a car go through an intersection 100 times, how many times will there be a car accident? And that's really what we need to figure out broadly to get normalization of that data. And that's really what we're missing right now.
Well, and that really, what you're describing there is really the underlying data bias that has plagued the cyber insurance industry since its inception. It's looked at it only from one side, because that is like when you're talking about fires or traffic or any other sort of insurance that might be out there that exists for coverage. The drivers of those behaviors are so much more simple. It's a lot flatter landscape. But cyber insurance, because there are so many different vulnerabilities, so many different systems, and so many different ways that an organization can configure themselves, even with the same systems, between two organizations that might be the same size, same industry, same revenue, whatever, there could be stark differences in their security posture for reasons that they don't even really truly understand, either of them. And so that's why I think what you're doing is really smart. But two, I think this is why the cyber insurance industry is only going to be driven down this path of partnering more deeply with cybersecurity experts to help them manage those portfolio of policyholders, so that they can not only achieve better profitability and better loss ratios, selfishly from their perspective, but much better customer outcomes too, because it's the piece of this that a lot of folks don't talk about in the traditional cyber insurance world. And I understand why they don't. And I hope that I'm not stepping on anyone's toes making this comment, but the traditional claims process is a headache. It's very long, it's drawn out. It's not geared at containment. It's not geared at changing the circumstances of an incident and preventing a breach. It's just dealing with the aftermath. And so it kind of inherently puts the policyholder in a place where they have to just kind of accept what's going on, wait for the cavalry to arrive, and hope for the best. And that is not good for the carrier, because it compounds their costs every day, every minute that goes by that an attacker is unchecked. And it also compounds the cost to the policyholder, because every day, every minute that goes by, they're not operating, or they're not transacting business, or they're missing opportunities that they had in flight, or a variety or litany of other business outcomes. And I think that's the part of what Cysurance is doing in particular that I think is really interesting and very compelling for the market. And I hope to see that trend continue and grow over time.
Yes. Well, it's these kinds of partnerships that enable that to happen, because, as you say, we all have to be intertwined. And I fundamentally believe that that's part of why we have gotten here today, is because there's been this disambiguated nature. It's like cyber insurance, it's over on one side and everything else is on the other. Mm-hmm. And that integration piece, I think, really helps us become smarter together. And then I think also it helps, as you say, it helps the end customer, because it also helps us point to this investment yields the most benefit, right?
Mhm.
The biggest bang for your buck, if you will.
Yep.
And I think that that really helps people prioritize, because over the years in my life of being in cyber and on this side, it's the prioritization piece that always trips people up, because everything feels important. And
Mhm.
if you only have $10, how do you deploy that $10 to do something effective? Because that's, and I think that's how we collectively can help people make those decisions. And also know, like, when there's a certain amount of, you can lower your price of insurance because you can take a higher deductible, because here's what we can do to help mitigate those risks.
Mhm.
So that much, just like any other buying homeowners insurance, we've done all these things to protect ourselves. So, we are willing to put skin in the game to be able to shoulder some of our own financial burden, so that we can reduce our exposure on that side as well. So there are lots of ways to think about it. It's just, I think, being able to be creative together with our customers is something that is certainly our joint objective, in trying to help people know that they can be more creative than, here's a sheet of paper, this is what you get on this policy.
Mhm.
Now just don't mess up. And it's like, that's a lot of pressure for anybody. It's really, I think, to people, I think, function better when they know that they have choices. And that's really the objective, is to make sure that people understand they do have choices, and that they have some control over how they can protect their companies and the work that they do.
Yeah, and that I love that sentiment, and that's certainly the way that we look at it too. Our goal in providing stack-based security solutions, essentially security program in a box for organizations of all sizes that align with key carrier requirements for the purposes of underwriting. Um, our goal is to take the pressure of the security side off of them and put them in a position where they truly can just think about how to operate their business in a more secure way, and not get into the minutia of, is this control right or is that control right, because we'll help offset that knowledge gap for them, right? And put them in a position where they can see discounts, they can see rebates, they can see these other benefits offset their cost of both their defense and their insurance premiums, and make the total cost of cyber risk management for them lower over time, including, to your point earlier, even when incidents happen, right? Because if you're doing all those things, that's lowering the cost per incident of anything that comes up if you're doing the right things.
Yeah. And rapid recovery, that's the key for everything. It's,
Mhm.
no matter what topic it is, it's being able to recover quickly. And that reduces cost, and of course stress, right? Because, as you said at the beginning, when you know someone who has gone through this experience, and you woulda, coulda, shoulda, all of the things, after the fact,
Mhm.
um, just being able to help someone go, oh wait, okay, I know, I just know who to call. Like, if they can just get there, that's a big help, because it's terrifying, and it's like a cyber mugging. You feel afraid and violated, and you don't really know where to turn. And those are the things that I think, being able to have solutions where people know that they have that kind of support is most essential, because just being able to react quickly is really the best scenario. And it will happen. I mean, and this is the thing, it will happen in some way, shape, or form. And just knowing that you have someone to support you through that decision process. And other things that, we've talked to organizations about, like, do have a plan around who can approve payments and set up of wallets, and just things like very practical things. Make sure that you have a printout of the phone numbers, because you might not be able to get to them if you have a ransom attack
Yep.
where they just didn't even know. So stuff like that can help us recover quickly. And I think that's where we are for today.
Yeah, no, that's great advice, and I think I would the last thought I'll share, echoing what you just said, is circling the wagons early and knowing who those parties are, not just having an incident response plan, but actually stepping through it and doing tabletop exercises. That's the key. And so, everybody, thank you very much for joining us. We will continue this conversation on another session, our next, and keep an eye out for our next podcast. But Kirsten, thank you very much for joining me, and really appreciate to have you here.
Always a great pleasure. Thank you so much.
Thank you.
Thanks.